A classic sign that you're on the early part of the S-curve is your growth is accelerating.
At least from a climate fund perspective, we can go forward with a bit more certainty.
Who's going to use these applications to create these next big winners?
Nick, Chow, James, welcome. It's so wonderful to have you here. 2025 has been an eventful year already, so I thought we would sit down and give our investors a bit of an update. Nick, starting with you, all of the Munro funds had really strong performance in financial year of 2025. Before we look forward, do you think you could give us a bit of a look under the hood of what worked well and some of the names and contributors who contributed to our outperformance?
Yeah, sure, Taylor. So thankfully it was a pleasing year of performance for all of our funds across the group. And pleasingly, from my point of view, there was a very broad-based contribution of performers within the fund. And so interesting, it might surprise viewers to know that, but the best performers this year were actually the climate holdings that we picked out of the climate fund in things like GE Vernova and Constellation Energy, which we've owned for a little while now. And actually our second best performing area was security. So these were defence stocks like Rheinmetall that we've owned for a long time, the German defence company, but also some of the smaller cap ideas like Curtiss-Wright and Axon. And so those were the two main contributors to the fund this year, and two areas that you probably haven't heard us talk about a lot. And then behind those was a little bit of big tech. So Nvidia was actually only the fifth best performer in the last 12 months, and then Meta was also a good performer. So that's sort of the broad cross-section of performance we got from different idiosyncratic areas, and that's always a pleasing result.
So James, we will come to you in a second to talk about the climate fund, but maybe Chow, could you fill us in with the same question for the small cap fund? What worked well over the last few months?
Yeah, so the small mid-cap fund, coming off a pretty strong calendar year 24, we were up 9.5%, which is roughly double what the index did, and really echoing Nick's point on the broad-based contribution. The number one contributor is security, but the number two is actually big data. So our exchanges, our brokers in Euronext and Interactive Brokers really step up. Travel had been a really good one. So Howmet is a standout contributor together with Heiko. And then the high performance computing names on the smaller side also contribute significantly to performance. So we were just really pleased to see performance coming from 4 or 5 fairly large areas of interest. And from what we could see in the second quarter earnings, that trend is actually accelerating.
So it's fair to say that the start of 2025 has been pretty eventful. The calendar year did start with the S&P 500 at an all-time high in February. However, there was Trump, tariffs, Liberation Day. Nick, we've heard you talk about good Trump and bad Trump. How are you feeling today about President Trump?
Yeah, look, it's obviously been a bit of an adventure, but you invest in the journey at Munro Partners, and the journey was down then up. But ultimately, look, we came into the year with the view that Trump would be net positive equity markets. There would be parts of his agenda that the equity market wouldn't like, and obviously that was tariffs, and parts that they would like, but over the course of the year we thought it would be a net positive for equity markets. The only thing that obviously happened is we got the bad stuff first when the market was expecting the good stuff. So the market wasn't in a good position for the tariff news, and then obviously that caused some volatility. And what we just say is like a correction in a bull market. As we look through the year now, we're starting to see things like the big beautiful bill and the tax cuts. We're starting to see the depreciation allowance, which is helping onshore investment in the US. We're starting to see the deregulation, which is helping onshore investment in the US, and also the M&A activity is starting to pick up. A lot of deals that you previously thought weren't possible are now possible. And this is the positive equity market side of the agenda for Trump. And I think as we exit the year, it'll probably be more positive. So from our point of view, we stick with the view that Trump is net positive markets. We always knew it would be volatile. It was probably a bit more volatile than we thought. There's probably still a little bit of volatility ahead. But ultimately, the market's going to get more and more immune to the Trump agenda and really just go back to focusing on earnings growth. And that's what we've seen so far this year. And we'd expect that to continue.
Do either of you have anything to add about Donald Trump?
Yeah, obviously, as Nick said, he's passed this one big, beautiful bill. So that does take some uncertainty off the table from the climate side of things, because he has repealed some of the IRA under Biden. So that's good in that it puts that in the background for us, and at least from a climate fund perspective, we can sort of go forward with a bit more certainty with regard to things like nuclear, storage, and on the utility scale, solar and wind side as well. We have a bit more clarity now, and the backdrop is still pretty good.
Nick, I'd love to shift focus for a second and talk about interest rates. I know the team's key focus is looking for areas of structural growth and not the macro. However, that said, the market is pricing in 2 to 3 rate cuts before the end of the year. What are you thinking about the interest rate environment and how are you positioning the portfolio because of this?
Yeah, so we came into the year, hoping for interest rate cuts, but I don't think whether we get the cuts or not is actually important. I think what's important is that the Fed can cut, if that makes sense. We have, 400 basis points up our sleeves, and if the economy does weaken, and there are definitely signs that it could be weakening, that the Fed can cut. And so what that means is, we're not in this situation where the Fed's having to hike rates like 500 basis points like they had to in 2022. We're either going to have flat interest rates this year or we're going to have flat to slightly down interest rates. And what that means is we can feel just a bit more comfortable that the economic environment's going to be somewhat stable. And going back to your point, that allows us to then just go invest in structural change. So from our point of view, macro is always important, but it's usually really important once every 7 or so years. It was really important in 2022 because we had a big macro change. This year, we're going to have macro changes. They may cut rates, they may not, but it's not really going to make a difference. As long as they're there to support the economy, as long as we don't go into recession, this is a fertile environment for us to go take risk and as you point out, identify that structural change.
And how are you feeling for the next few months ahead? And how are you positioning the Munro Global Growth Fund and Munro Concentrated Global Growth Fund? What areas are you excited about?
Yeah, so for us, look, AI is still the thing that excites us the most. The funds have performed well by investing in the shovels of AI, so we think this is a boom. We're in a boom of building, constructing data centers globally. These data centers are used to process intelligence. Every company in the world, every boardroom in the world is sitting down around a board table working out how they can use AI to either, to improve customer service, to beat their competitor, or to cut costs. And all of that means that AI use cases are going through the roof. So there's a number of ways we've been playing this and a number of ways we can continue to play it into the future. The first is obviously investing in the shovels that we talked about. So that's semiconductor companies. That's a lot of these power generation companies that obviously performed well last year. And that's even companies in specialty finance that help financing this huge data center build out. But as we go forward, the bit we're most excited about is who's going to use these applications to not only improve their business like Axon has done in the last year, but who's going to use these applications in healthcare, construction, robotics, autonomous driving to create, these next big winners. And then vice versa in the absolute return fund, on the short side, who's going to be disrupted by this stuff? Because that is changing very quickly at the moment. And so it's going to make, in my opinion, the next 5 months, but even the next couple of years, very exciting as we plot our way through this, quite frankly, very disruptive environment.
So James, moving to you, Nick has mentioned a few things around the climate area of interest. The Climate Fund had a fantastic 2025 after a really strong 2024 as well. What were some of the key drivers?
Yeah, so as Nick mentioned, it's really around these power generation companies, particularly in the US. And so we've had basically 20 years of underinvestment in the US as the US has deindustrialised and a lot of manufacturing activities gone over to Asia. So everyone's underinvested for a long period of time now. Now there's a very fast realisation that they need to catch up with their infrastructure. And so to Nick's point about GE Vernova, Constellation Energy, just demand for their equipment goes up or their power generation goes up. And so that's brought a lot of attention to the area, and it means that the backlogs in those areas are growing as well because people need to build. So we in the Climate Fund, we own a lot of industrial companies that provide this type of equipment. We own a lot of utilities that generate a lot of this power. And so that's the easiest way to think about it. These guys are basically the providers of that infrastructure.
And so we did touch on it briefly earlier about Trump's One Big Beautiful Bill. What does this mean specifically for the Climate Fund? Like I said, you did mention it, but maybe you could go into a bit more detail.
Yeah, so we had under Biden a long period of incentive visibility. Now, the One Big Beautiful Bill has kept a lot of that, but it's also pulled a lot of that back as well. And the areas that have been hit the hardest, people probably aware of in the press with Elon Musk and Trump, the EV credits are going and the residential solar credits are going this year. So that's not good for those particular areas. Thankfully for our fund, obviously we're active. We've been aware of this for quite some time, even heading into the election, well into early 2024. We sort of moved out of some of these areas. Utility scale solar and wind is more where we're positioned. That's a little bit impacted, but we still have a little bit of visibility for the next few years at least for those companies. So they're not too impacted. we have a lot of the fund positioned in nuclear, storage, areas like that, and that's areas that the Republicans have supported. And so those areas are probably better under Trump, to be honest, and the One Big Beautiful Bill than perhaps even under Biden. So when you're active, you can sort of move the portfolio as you need to based on these top-down changes.
So with that in mind, how are you positioning the fund for the next few months ahead, and also what are you excited about?
Yeah, so we've probably got a lot of catalysts coming up in the next few months. We obviously speak to the companies every quarter. The backlogs are growing, but also they're flagging that they have big things coming down the pipe. So I think there's going to be a few more data center deals on the nuclear side. A lot of people are very excited about small modular reactors and things like that. You're probably going to see announcements in that space, particularly in the US. That's an emerging thing that we're tracking, and we have some investments in that area. But realistically, this is probably not going to happen for the next five years or so because of the technology where it's at. But at least you're going to start to see the beginnings of this, and this is something we're going to be investing in for a long period of time. So it's going to set up a good 5-year track rate, 5-year outlook for us for some of these areas.
Chow, moving to you, I'd really love to talk about the Munro Global Growth Small and Mid Cap Fund. Why are small and mid caps attractive right now?
Yeah, for two really simple reasons. One is they're on the acceleration path of the S-curve. So we are growth investors. We think about the S-curve. A classic sign that you're on the early part of the S-curve is your growth is accelerating. So across the areas of interest that we are invested in, our security companies are growing. They were growing 5%, 7%, now they're growing 10, 15. I mean, that is a really remarkable acceleration. Our high performance computing holdings really going from strength to strength. We just have a company reported 160% growth. So the growth is fast on the absolute level, but it's still accelerating. Our digital media companies in Reddit, it was growing at 50, now it's growing at 70%. So I think that acceleration, it's just an incredible phase in the life cycle of these companies. And by the way, the market tend to price these companies really wrong because all the classic valuation methodologies frankly cannot accommodate an acceleration in growth. They're all pricing in deceleration. So that's the first thing, just the pure growth momentum. The second thing is valuation and just the complete lack of attention. So we could still pick up these small mid-cap companies, and we did over and over again across a whole variety of areas of interest of buying these really fast-growing companies in huge markets that's in the acceleration part of the growth curve, and then we end up paying, frankly, decelerating or really old school multiples, and multiples that's far cheaper than a large cap in the same space. So we felt there was that valuation upside together with that acceleration in growth that just make these companies really exciting.
So what do you think the next few months has in store for this mid-cap portfolio, and how are you positioning?
Yeah, so we continue to see just a really rich pipeline for ideas that come through. We continue to see really fast, unloved small companies that's growing really fast. So we are really excited. The existing areas of interest in security. You probably have read some headlines on defense tech on the private side is really exploding. And yet these small cap defense companies that has a huge amount of technology edge in them with proven track record are just not really being looked at by the market. So we're excited about that. We're really excited about AI. When AI make an impact on these smaller companies, the impact tend to be explosive. So we think there is a lot more of these acceleration and big gap up in growth coming our way.
Nick, anything to wrap us up?
Yeah, I mean, I just think, look, we've been 10 years here at Munro nearly, and I've been doing this for 20 years as a growth investor. Through that whole period of time, what we do here is we identify big structural changes and we've identified the companies that benefit from it. We've done that through digital advertising, we've done that through defence and security in Europe, we've done that through power generation and what's happening on the climate side. As I look forward, this is going to be one of the biggest changes that happens in our lifetime. This is one of the big ones that I've ever seen, and just couldn't be more excited about what the next 3 to 5 years are going to produce. I can't wait to see what's going to happen. We essentially built the business to identify these changes and benefit from them. We've got great people in terms of on the climate side and the SMID side looking into this, and just really excited about the ideas that we're going to find over the next 2 to 5 years as the world changes at the rapid pace it is. So looking forward to it.
As am I. I look forward to seeing how the next few months play out, and I look forward to hopefully sitting down with you guys at the end of the year, and we can chat then. Thanks very much for your time.
Thanks for having us, Taylor.
Thanks, Taylor.